Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Friday, March 24th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a jam-packed show today. 3 guests for you on the docket. Our first will be Scott Rosen. He's the CEO of Visible Alpha. Then at 8:35, we're going to be joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. And then at 9, we're going to have Kenny Glick. He's the owner and creator of HitTheBid.com. In between those guests, we are talking about the shoe trade is on today. We have earnings from GameStop, Finish Line, Micron. A couple interesting ratings changes to note: Under Armour and Macy's, and some volatility in oil ahead of the OPEC meeting on Sunday. Joel, how you doing this morning? Are you okay?
I'm okay.
Okay.
Yep. Disappointing loss. S&P futures are up 275 at 42.75. Pre-market highs 49.50. Pre-market low 40.75. We have a nice setup here. 3 closes right at the area we're trading at now. So 23.42. Be a big level to keep an eye on. Crude is trading up 27 cents, just under $48 at 47.96. Gold and silver mixed. You have gold down $1.20 and silver up a nickel. Dennis, how you doing on this Friday morning?
I'm doing better than you, Joel. I feel bad for you. Sorry about the Michigan loss. It was a good game, though.
Yep, disappointing. They would have had a rough time with Kansas as well. So, good season. I'm very satisfied.
Let's talk markets here. We'll move away from sports. We got a couple big earnings plays here, and I want to jump maybe right into some of these earnings stocks here because you are getting a huge lift on Micron here. MU trading up right at psychological $30 level too. We talk about these big psychological levels. Ace often talks about them as well, and they work. And, we're looking at 30 here. It's got up in the pre-market, just touched over 30 a couple times, but that's where it seems to be struggling here. It's peeling off a little bit now, but holy cow, it's a big pop for Micron this morning on their earnings reports, up 12% right now. Spencer, can you give us the details of the report?
Yep, EPS 90 cents versus 85 cents. Sales of $4.648 billion versus $4.64 billion. The revenue was strong, up 58.7% year over year.
Jump into the technicals, Joel. I gave you a $30 level here on Micron, but we know you like to go to the charts and see exactly what you see in the dailies. Actually, go to the monthlies. You got to go a long ways back here. What are you finding us?
Back in April of 2015, we had a 29.78 high. Keeping an eye on that psychological $30 level. Pre-market highs 30.09. The next monthly high above that was from March of 2015 when you had a 31.50 high. We'll see. I mean, they're going to have to sweep through a lot of stock in the book here to get it to open up at $30. But opening print should be important, as well as that pre-market high of 30.09.
Talking sympathy plays, you can go a lot of different ones here this morning. Western Digital, you still got this one in your portfolio, Joel?
Yeah,
WDC.
Sure do. Yeah.
We're getting a nice lift on it here this morning. It's up 3 points here in the pre-market. Full disclosure, I've actually got a short on Western Digital, but I've got a long on Seagate. So those stocks tend to move together there. So I hope that I'm somewhat neutral. STX is bid up this morning here, not quite as much as WDC, but WDC getting a nice lift up 3.82% off of the Micron earnings. Also, we've got trading here up this morning. You got AMD trading up. You've got Nvidia trading up here. I think that's probably piggybacking a little bit off of the Micron. Agilent was really pumped last night by Kramer, and if you're looking at it this morning, it's trading up substantially as well. The entire NASDAQ, though, is getting a nice lift here, or at least some of the stocks that are related to Micron.
Yeah, and I noticed Nasdaq stayed green a lot yesterday in the morning when the overall market was selling off. Just give you a few levels here. Western Digital, your pre-market high is 79.20. Recent high, the move has been 81.57, but they've already had their earnings, so I don't know what kind of follow through you'll get. Taking a look at AMD, a very heavily traded stock. High of the move is 15.55. Let's see what we got going on in the pre-market. Nope, haven't even cleared 14.10 yet. So not as big a boost in AMD as Micron here, trading near $30.
Yeah, Western Digital, more a little pure play there, and that's the one that I was seeing really lift there in the after hours on obviously the great report there from Micron. Jumping over to the other way, if we want to go to earnings, we've got a couple disaster stocks of the day, and GameStop, GME, down 11% in the pre-market, and you did not like what they were saying here in the report, Spencer. Give us some details on GME.
The numbers for GameStop, $2.38 is the Q4 EPS versus 2.29 cents. So they beat the Q4 number. Sales 3.05 bill versus 3.1 bill. So that's a slight miss, but whatever. They see EPS for the year at $3.10 to $3. I'm sorry, this is for the quarter. $3.10 to $3.40. $3.73 was the estimate. What really bugged me, though, is when they said they were going to no longer provide EPS and same-store sales guidance to, quote, reduce investor distraction. Explain to me how that will reduce investor distraction.
Well, a lot of retailers cut out same-store sales years ago, so I don't have a problem with that. But EPS guidance, cutting that out, that does not sound that great to me. And why are they doing that? Well, maybe because they think their guidance is not going to be that great.
Because it's never going to be good.
I mean, this is a classic company here that I think, you kind of got Apple eating their lunch. Everybody can buy these games. I'm not a gamer, so, other gamers out there might want to correct me on this, but, the hardcore gamers, maybe you're still going to get them to go into GameStop. But, if you're, occasional gamer, you can get all this stuff just on your apps now. I mean, why do you need to go, into the physical store and buy the physical cartridge or buy the physical game? Maybe they sell some other stuff there too, but it's pretty easy there. The games are just right on your iPhone. You download the app and you're done.
Well,
I don't know why you got to go to GME.
They're on your system. You can buy your PlayStation game on your PlayStation. You can buy your Xbox game. You can buy it on the system right there.
Cut out the middleman. Who's the middleman? GameStop.
Yes, exactly.
No, we've been right on this one though, so we're not always right on the show, but we've been dogging this stock. I feel like at least for the last year and a half, and it was up in the 30s. Joel and I didn't like it. We didn't like it in the higher 20s. I think still don't like it here at 21. I think this company's in a world of hurt. I know you can say, oh, there's 7% dividend. I don't even know how safe that is. When the company's saying stuff like we're not going to give any EPS guidance, doesn't give me any, confidence there to run out and buy the stock right away. So we're down 11%. Market is, talking. It needs to hold that $20 low that it got back to in October. Joel, what do you think about this whole GameStop?
I haven't played a game since Pac-Man or Asteroids.
Joel dated himself. He liked the Atari system. Did you have the Atari?
I never even had that.
You never had it either. What did you play?
I was outside.
Or you were never a big gamer at all.
I was outside doing sports. I wasn't inside,
I had the Nintendo, the original NES. That was my thing. I liked the Atari, though. I had the Atari and the ColecoVision, if you remember those back in the day. I liked all those games, too. And I liked the original Nintendo, but then, after that, I turned 16 years old, got a car, and I guess I was done video gaming.
Fun fact about Atari, the guy who invented Atari is the same guy who created Chuck E. Cheese. So,
oh, really?
Yeah, I learned that last week. There is one person who does not think GameStop is dead in the water. That's Michael Pachter at Wedbush. He lowered his price target to $25, but he maintained his outperform rating on this stock. So if you're looking for
Packer's the biggest gamer of them all.
Yeah.
So,
and if you're looking for someone who
fight in this sector, but I'm still gonna fight him, and I don't like the stock at 21. My own opinion.
2085 represents your pre-market low. That's actually not the lowest that this stock has been. Back in November, you had a 2010 print, so keep an eye on that. Also, 20, a nice psychological level. Looks like someone's trying to bring in some stock here after you hit that 2085 low, having traded under 21. If you get a bounce, who knows where this thing's going to go. Use if you're trying to long, use your half and whole numbers for exits. Lot of room on the upside, but a lot of people stuck in the stock.
Your other retailer disaster of the day is going to be Finish Line, FINL, and this earnings report was not good, and I'm kicking myself. I actually contemplated going, taking it through the report short because of the disappointing Nike earnings. I was like, this, is a company that could disappoint as well. And I was like, should I take it through? Should I take it through? And then I covered, and I did not take it through. So I went flat, and I come in this morning, and that report is not good, Spencer.
Q4 non-GAAP EPS of 50 cents versus 71 cents. Sales
Ooh.
of 557.5 versus 550 million, so they beat that number. The big bogey though is the guidance. They see their fiscal year 17 EPS at a buck 12 to buck 23. Guidance or estimate was at a buck 46. So they missed the
Ooh.
fiscal year EPS guidance by, on the high end, 23 cents.
This chart has been ugly too. I mean, you look at the dailies, we were $24 stock in November, now we're 13, basically cut in half in the last 3 months. If you go to the monthlies back in 2014, this was a $32 stock. So it's 13.65 here now, Joel. What are you thinking on finish line? We do have a 3.2% dividend on it. I think this is a safer company than a GameStop, but at the same time, these physical stores are just not doing that well. The physical mall stores have not been doing well. We know, it's not just shoes. It's been a lot of other things as well. And again, I don't know if Amazon's eating the shoe market lunch. I don't know if people buy shoes online, but, I bet some people do.
One number and one number only to look at in finish line. Pre-market lows 1345. That coincides with your September 2000 low at 1322. So if you've been waiting to get short from that level, keep an eye on 1322. After that, 1312 and a half and 1178. That was your low back in August of 2010. So 7-year lows here in finish line.
We had one other earnings to talk. I know KB Homes last night. It's not really moving much, but Spencer, give us the details.
KB Homes Q1 EPS of 15 cents versus 13 cents. Sales of 818.6 versus 802.79 million dollars. So they beat the sales number. They beat the EPS number by a hair.
Stock just hanging out. I wasn't even sure it reported because the volume was light last night, and it's light here as well this morning, just not moving at all. Only 4,000 shares have traded, and 3,500 of them were off exchange. So 1935, 19 to 1935 is the current market. So it's sitting here just kind of doing nothing. People going to have to wait till maybe 9:30 to see if this thing's going to go up or down on their report.
Is this thing right? I just pulled up the monthlies here, and this was a $85 stock in 2005.
Well, there you go. That was the housing bubble, the financial crisis.
Man, but I guess
Well, all of them got killed. The house, I
Yeah.
mean, that was the cause of the financial crisis, for, people who were living on a desert island. If you want to know why it was, the aggressive, lending and, then home building and obviously, the home price collapse. Well, nobody's building houses after that because you could buy them, because their prices were all collapsing. So home builders were really at the center of it as well.
This has been a serial, though, underperformer. I mean, you look at Lennar here, all-time high, 68.86. I mean, this thing is back in the 50 handle, as opposed to KB Homes here. Boy, oh boy, oh boy, this thing made an all-time high at 85.45.
I wonder if they spun something off on there.
Yeah, I
Because
don't
to
know.
be that much of an underperformer from the other one.
You know what? We'll have to do that. That's a good call on that one. Maybe they.
I don't know. I'm just
I
saying
don't
a question.
remember though. I don't
I
remember.
don't remember anything either, but you never know.
All right, this
There could
stock
be
has
some
had
type of adjustment that needs to be made in there.
the stock's had a little bit of a run up here. Over decent move in 2015. Or excuse me, 2016. Doing okay in 17. I guess I just keep an eye. There's a series of highs over 1950. The highs of those being 1982. So resistance is resistance till it's broken. Whole number of 20 may have some size too, but
I
not
see 20,000 up at 20 in the book. I was just checking at the same time,
Okay.
so it could be a little bit of a start. It's not a huge number though. Like when you see like something like McDonald's, and I'll just give you that number again that we've been talking about on the show here. That 130 level at McDonald's has over 100,000 shares up there. That's a lot more significant than a little 20,000 shares on KB Homes.
Not sure I understand Dr. J. He said, can you check IBM? Is it really down 20? I don't know.
No, that was an odd lot cross.
Okay.
So, or
yeah.
just someone, not even, that's just an odd lot. That was off exchange. So strike that from the tape. Stock's bid at 174.69. IBM's not down anything. That's the bad thing about, sometimes, some of these brokers, their last will adjust with the off exchange trades. And sometimes there's just some funny stuff going on. And some odd lot trades off exchange at 154.78, and then it'll adjust your last I mean, really, I'd like to see, your platform just go with the on-exchange trades as opposed to, these off-exchange stuff, which is sometimes across, sometimes there's something else going on there, sometimes they're late reports to the tape. If that's trading at 154.78, that's a very late report to the tape because it hasn't been there in months, but I don't know what that is. It's just an odd lot on the tape.
All right, 8:15. Time for our first break of the day. We're gonna bring on Scott Rosen, the CEO of Visible Alpha, is a former sell-side analyst, and now he runs his own fintech company that offers some pretty valuable research. And we'll let him explain to us all about it. We'll be right back with Scott Rosen. Alright, welcome back, traders and investors. This is Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Scott Rosen. He's the CEO of Visible Alpha. Scott, how's it going today?
Very well, thank you.
Tell us a little bit about Visible Alpha and what you guys do.
So Visible Alpha is a company that was formed by a consortium of banks, Morgan Stanley, Bank of America Merrill Lynch, UBS, Citi, and Jefferies. And the reason we came together to form the company was that clients were finding, the institutional investment clients were trying to use a lot of the information that's developed by the analysts at those firms and others, and they really have a higher level of expectation of how they get serviced by their analysts, and they're looking for much more detailed information. And as you know, analysts who follow companies create, they talk to management, they talk to competitors, they do whatever to come up with their ideas of what they think about the company, and they create spreadsheets which have all of their thoughts kind of quantified. And for many years, they kept those very close to their chest. That was kind of their secret sauce. They didn't want anyone to know about it. They'd move from firm to firm, keep that to themselves. They write research reports. They talk to people, but they kept their underlying estimates, not earnings per share and revenue, but the very detailed assumptions and how they feel the company financials flow. They would keep to themselves. But now, clients have much higher expectations about how they want to get serviced. They want to really understand the differences between the analysts at a much more granular level. So they wanted those spreadsheets. And so over the last few years, analysts have started giving it to their clients. But if you've ever created spreadsheets, there's no rules. You can create a spreadsheet any way you want. And so
that's true.
Some will have very complex models. Some will have very simple, someone might have 52 tabs in their spreadsheet, and someone else has one tab with 10,000 lines in it. And people call things different names. They use different accounting treatments. And so it's very difficult to make use of that information. And so analysts are like, can you solve this problem somehow? So the idea was to come together to take all of those models, extract all of the data, extract all the formulas, and normalize the data so you can make really nice comparisons across analysts at a very, very deep level. Not the kind of stuff you get today off of conventional estimate services like earnings per share and revenue, but actually, individual product sales forecasts, costs, divisional revenues from different regions, the detailed underlying assumptions the analysts use to build up their thoughts on the company to get to earnings, to get to revenues.
Okay, so you're taking all this analyst information, you're normalizing it, and you're providing it to your clients who are on the institutional side right now.
Right now, yeah, we've been working on this for a number of years, but we've just started. We just launched it. We cover about 1,500 companies in the U.S. And we're just starting with kind of our initial target audience are investors who already kind of live at that level of detail, who are already themselves modeling the companies, who are very interested in those low level forecasts. And so they tend to be very, data intensive users. And we're focused on servicing them first. And once we get that down and everyone's comfortable with it, then we'll start creating more derived data, more data that's sort of available to others within the institutional market, and ultimately into potentially retail market as well, and sort of consensus level data.
So I guess over the past few years, then, and you have the background yourself as a sell side guy, what changes have you seen in the sell side industry in terms of the impact of research?
Well, I think it's changed dramatically. If you think 20 or 30 years back, the informational advantage that the analysts had over their clients was just dramatic. I mean, it was before Reg FD, so the company management, sort of the standard practice was to disseminate information via the analysts, right? I used to be an analyst. You would talk to management, and they tell you stuff, and then you would tell your clients, and then it would eventually filter out into the marketplace. Obviously, that's verboten now, right? You can't disclose differentially, and so you don't have that source of information. And also, just generally getting basic information like filings. I don't know if you remember, 25 years ago, there were little vans that would drive around the city from a company called Disclosure that would hand deliver you filings and annual reports on companies. It was just difficult to get basic information. And so as an analyst, you had access to a wealth of information that your clients didn't have, or that was very hard for them to get. And so because you had that big informational advantage, it didn't take much for you to create huge amounts of value, right? Writing a research report, was getting a research report from your analyst was a huge source of just raw information. And so you didn't have to do, and I'm not saying there weren't analysts who were doing good work, but you had a built-in advantage. That is really evaporated, right? The internet, services like yours and others, make the dissemination of information, particularly information about the past, very widely available. Information about kind of what's happening right now with news service and other things also is dramatically easier. So what is the advantage that an analyst has? What is the value proposition of a sell side analyst? And I think it really comes down to two fundamental pieces. One, they have kind of a privileged position in the sense that they're talking to all of the clients, they're talking to investors. So they have a feeling for what's going on, what are the investment questions that clients have. And so they have a unique position to be able to talk to people about that, just by the nature of their job. But what are you paying for? That's part of it, but it's also, obviously, hopefully, they're smart people, they're assimilating information, they're generating their own insights. And so it's really about having people who are dedicated to doing this, who are, getting information from lots of different sources, but it's not the raw information you care about, it's, the intellectual horsepower that they're applying, and hopefully, coming up with insights.
And then, I guess to me, one of the biggest changes, it seems like, and with platforms like yours and others, is that it sort of allows us to hold these analysts more accountable, right, for their research. So we can,
absolutely.
So we can kind of see,
absolutely.
Maybe who to pay attention to and who to ignore.
Yeah, I mean, it's the old thing about sunlight being the greatest disinfectant. I mean, I think there's a lot of different things, different pressures, I think, happening. The most fundamental, I think, is, if you look at sort of what's happening with the rise of passive investing, there's just a fundamental question people have about, who is providing insight. As a portfolio manager, you're far more, there's far more scrutiny on you to deliver results, to be able to show that you're generating alpha. And so that same requirement is being passed on to your service providers and being passed on to the analyst community, saying, you got to show the value you're delivering. It's not good enough for you just to give me maintenance research and just sort of tell me what's going on. You need to provide real insight, and you can be measured on that. There are ways to see how you're doing. It's we can find out whether your track record is good. The interesting thing, though, is it's what are you actually asking for from an analyst? And I would argue that accuracy is important. Obviously, if you could find someone who's always on the right side of a surprise, that would be immensely valuable. But often, if you think about it, what an investor is looking for, at the end of the day, they're going to make the investment decision. They want to use their own judgment on whether they should buy and sell something. So what are they looking for from their analysts? they're really looking for interesting, differentiated ideas. They're looking for, tell me something I don't know. Give me some angle on this that maybe I'm not thinking about. And so often what you're looking for an analyst is not just accuracy. You're looking for someone who's going to have that outlier idea. When I was at a former job, I was director of research at IBIS, where obviously we had a lot of academics working on our estimates data. And I remember one study which was quite interesting, which looked at analysts and divided them up into different categories. It divided them up into bulls and bears, which is obvious, and then also sheep and wolves. And the idea was that some analysts are always going to be kind of positive, and this was on a stock-by-stock basis. It's not saying that the analyst overall was always like this. But on a particular name, is this analyst always kind of positive, always negative? Do they make bold calls? Are they a wolf? Are they making sort of bold outlier calls? Or are they sheep that kind of just follow everybody else? And the interesting thing about that was that when you looked at the accuracy of the forecast, and you looked at the wolves, which is what people care about, like where are those bold outlier forecasts, and you looked at what happened afterwards. Did a wolf get followed by the sheep? Did everybody else sort of take the lead of that analyst? And what you found was, if a wolf made a bold call on a stock, and a bunch of other analysts who were sheep on that particular name sort of followed, that was kind of a validation. They looked at what that guy was saying, say, hey, he's really onto something, and sort of chase that forecast. Or they might have looked and say, what is that person thinking, and didn't. And that was kind of a signal, a confirmation of kind of that outlier call. And that's, I think, a lot of what people are looking for when they talk to analysts. They want to say, what are you telling me that's different?
And we talk about that on our show a lot, about analysts chasing price. We know obviously at earnings, big fundamental events, and who's early, who's late on the price action. Something to keep in mind for sure. Scott Rosen, the CEO of Visible Alpha, they'll be at the Benzinga FinTech Awards in May. If you want to learn more about their site, you can go to visiblealpha.com. You can vote for them for the Benzinga FinTech Awards. They're up in the Finding Alpha category. You can find out more about that at benzingafintech.awards.com. Scott, thanks so much for hopping on today. Hope to see you at the awards in May, and have a good rest of your day.
Thank you very much. See you.
All
then.
right.
Bye now.
8:28. Couple more minutes till we get our look at the imbalances. Any movers? We didn't cover Under Armour. I wanted to get to that because Under Armour.
Yeah, some ratings changes here.
Yep.
What do you have? What's the deal on Under Armour?
Under Armour at Jeffries. The first real upgrade we're seeing for the stock since it got crushed a few weeks ago. So they like athletic apparel was strong. They say they have Adidas has dented Under Armour's market share, but gains are moderating, and their Under Armour is aided by their brand. Their brand strengthening is what they say. And on top of the Jeffries upgrade this morning, we also have news that Under Armour is going to release a new 3D printed shoe. So
Jeffrey goes up to buy, price target $27 on the UAA. If you want to look, so you can look UA or UAA. They were covering the UAA. Stock is trading up about 4% here in the pre-market, so getting a nice lift here. I mean, here's something where sometimes it takes a big analyst rating, a big analyst make a bold call to turn a stock around. But I'm not going to get real bullish on UAA until it can get over 20 and get a close over 20, because it seems like every time these retailers pop for whatever reason, they're just met with more sellers, as there's just so much overhead supply and so many people just hate this sector. So I don't know. What are you seeing on the charts, Joel? UAA?
I was just going to echo that sentiment as well. Trade, is it offered there at 1975? I see it's just.
Yeah, it is. It's pretty. It's about 4,000 shares at you, but it's traded some volume, 17,000 shares. I think you could see 20. I think it's a big hurdle though. So if you're buying at 1975, if you got overhead resistance at 20, I just don't know what your upside is. It's not like it's company news. It's an upgrade, 4%. It's pretty much priced in, what I would say.
Yeah, as well, a couple daily highs at 1989 and 1994. Those levels are reflecting the 20 psychological level, so we'll keep an eye on it.
Let's jump over here to the imbalances, and we'll see if there's any that jump out at me. They just came in at 8:30, which is 12 seconds ago. Bank of America, 100,000 to buy. Wow, they're small. They're small. Sprint 100,000 to sell. MO, which is trading down the pre-market. Was there some analyst action on MO or something? Because I noticed it was trading down already. It's got 34,000 to sell here. It really had a rough day there yesterday. Was it yesterday that MO? What happened yesterday in MO? Goldfish memory here.
Oh,
Was there an analyst
they
downgrade?
had an RBC downgrade.
RBC
Yeah.
downgrade. So that's the gap down in the chart. And I don't know if there's some follow through here this morning, but it is trading down in the pre-market, and there's 34,000 shares to sell on the open. But these imbalances are really small here. They're like 10,000 one way, 20,000. They're pretty small. One institution coming in will change them all.
That analyst move in Altria Group, Mo, the symbol. Really interesting timing on this one, Dennis. You can show you on the monthly charts. All-time high. I mean, this doesn't even reflect it, but yeah, it did. It made an all-time high. This was a couple days ago at 76.55. The next day, it only got to 76.38. So analysts trying to pick the top here in Mo, and not a bad time as the issue was approaching the all-time high.
Multiple stocks being talked about in the chat here. Let's just jump into them. Ace earlier mentioning HTGM. This stock was $2 back on Wednesday. It's hitting 6.25 here right now, up 58%. Spencer, I'm assuming this is some type of drug news.
Sorry, I'm messaging people in the chat. What stock are you talking about?
HTGM. You don't listen to me and write everything down.
I'm sorry. I know. All right. So first of all, they had earnings yesterday. They reported Q4 EPS of a 76-cent loss, which is in line with the estimate. Sales of 1.5 versus 1.81 million dollars. So that was yesterday after the bell. They did have some news yesterday before the bell, some drug news there that was positive regarding EdSec and ALK Plus is, I think, the name of that drug. But so they had that plus the earnings yesterday after the bell is the driver there.
Stock up huge here in the pre-market. Joel, is there any levels to talk about on something like this?
You hit 678. Now you backed off 50 cents to 6.25. So you got to put significance on that pre-market high at 678. This thing has just been a serial underperformer since its IPO. 959 is a level that it reached back in October of 2015, but go look on your dailies. You probably could find some other levels here, but the fact we backed off from that 678 may think that someone's eyeing 678 to 7 to load some stock.
Bro from the chat is asking about Agilent, saying, is there any news? I think, this is a little bit Texas strong today, but the main reason was Kramer was pumping this last night on Mad Money, and this thing started taking off on the Kramer pump. And man, he'll go through some lulls where he'll talk a stock and it won't really move. Right now, man, when he talks a stock and he brings one to your attention, it really moves. And it seems like it's a matter of whether it's known that he's going to talk about it or not. But it's these random ones he just comes out with out of the blue that really seem to get a lift. And this was popping off Mad Money last night over $1. And that is a big move for a Kramer pump. I mean, often you get 20, 30 cents on a Kramer pump on some of these stocks, but over $1, that's a big move. That being said here, tech is strong today. So, that's one consideration if you're trying to fade the Kramer pump.
If you were trying to sell the all-time high that was made on March 15th at 54.82, you got filled as 54.84 is the pre-market high. So
it got that high. That was last night off Kramer.
Yep.
Wow. Yeah, this just gets a little ridiculous. 55, I got to think too. I can see 10,000 shares in the book, but it's early. The book might build. So I don't know. We're 55, 54.82. I think higher 54 as you run into whole kinds of trouble. And I never like buying a Kramer pump because it seems like when the dust settles, a day or two later they come back down. And Kramer even says that too. He's like, he knows he's influential. So he's like, don't go out there after hours and buy the stock, and pay up $1 for it because I'm talking about it. He's one, and he didn't say this on this stock, but he said it in the past. He's like, wait for the little, to get back down to that level, and maybe you try it then. So longer term, maybe he's sometimes right, but short term, if you're just chasing, you're already chasing this up 2%.
Yeah, big pop. Bob Wire wants to know if you've ever heard of Medical Facilities. It's a Canadian stock that pays a 7.5% dividend.
No, I don't know that. I follow mostly U.S. stocks, even though I'm Canadian. I trade in the U.S. market, so I do not follow that company. Is it trade over here? Ask Bob Wire if it trades over here as well. We could do a technical, but I don't even follow. I don't follow hardly any small Canadian companies.
And did you see the news that Canada is not allowing student trips to the United States anymore?
What?
Yep.
What
Yep.
do you mean?
They're like if you are in a day school or in Toronto or whatever, and you want to do a day trip, you can't, or whatever, a field trip to the United States.
How can they regulate that?
They,
I mean, they don't allow the teacher the privilege of being
yeah,
able
well,
to
because they
take their
don't,
kids.
yeah, because they don't want them
So
to.
when kids in Windsor or something can't go to Detroit Zoo,
Correct.
that's
Because,
horrible.
well, because they don't want them having problems getting back.
Wow. So, but you'd think that onus would be on, the teachers and the school itself just to block it all together. I mean, that was a fun thing to do when I was a little kid. I mean, we don't have a zoo in Windsor, Ontario. We don't have a zoo. We had to go all the way to Toronto. I mean, that was a little fun thing. School trip to Detroit Zoo. I don't know.
That
That's terrible.
that'd make for a great comedy though. A school bus full of kids can't get back over the bridge. Anyway,
Yeah,
8:35
we're not
now.
allowing these
Yeah,
We're
8:35.
not allowing these kids into our
We're gonna take a quick break. We're gonna grab Jonathan Corpina, senior. What are you saying, Dennis? Senior managing partner at Meridian Equity Partners. We'll be right back with Mr. Corpina from the floor of the New York Stock Exchange.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Alcon, along with Dennis Dick and Spencer Israel, and we have from the floor of the New York Stock Exchange, Jonathan Corpina, senior managing partner at Meridian Equity Partners. Jonathan, how you doing on this Friday morning?
Gentlemen, good morning. Happy Friday.
Happy Friday. Now we're coming up near the end of the quarter. Do you think just earlier in the week we just had a little bit of profit taking, great quarter, book the numbers, get the bonus, and just a lack of buying and some institutional selling?
Yeah, I think there's just a few factors that are going on. I think, on an overall scale, the market has had a very good run up. We really haven't had any headwinds in this market. No real major negative headlines. Investors have been sitting back and watching the market evaporate higher, and have been happy with the performance that they've seen. Most recently, it seems like the headlines that have been coming out of Washington have really been dictating the market. Clearly, we're going to be watching the vote coming out for healthcare reform, and as we're being told, we should be getting something coming out today. And next week is really the end of the month, end of the quarter, and investors sometimes use that as an opportunity to really look at their portfolios. Portfolio managers too really evaluate what's going on with their portfolios and whether they take some profits off the table, or if they've got some cash that they've been waiting to put back into the market. Sometimes we start to see that rolling in. We actually started seeing that earlier this week when the market did have a little turn to it.
Jonathan, talk about when you get major news coming out like that healthcare vote. As a floor trader there, what happens, prior to the news dissemination, and is it like the market makers all back off? Like, just talk about the whole process, when you get major news coming out on a specific, stock.
Right. For something like what we're talking about coming out of Washington and the headlines that we're waiting for and looking to see, I think there's a lot of uncertainty as to which way this is going to go. I mean, look, we all try to predict what was going to happen in November coming out of Washington, and I think most of us had it wrong as far as predictions were concerned. So I think in something like we're seeing today, traders, market makers are really going to step away from this market. And step away, I don't mean they're going to sell and liquidate. I just mean the participation levels will kind of come down a little bit until we start to see where the direction is. And when market makers and market participants step away, we start to see a little bit more volatility. So even, for example, when we're waiting for an unemployment number or an ADP number that comes out, or the economic data that comes out pre-market, you'll see things get very quiet very shortly before the news is announced. We see some volatility up and down, and then the market always seems to find its spot. It seems to find the right price. So I think what we're looking at in today's activity, and I'm assuming that this vote is going to be pushed off till after the market closes. But I think investors are really just going to have to sit back and wait and be patient and to see how this market is really going to react.
All right, moving into end of the quarter, what are you looking for here in Q2 here? Is there any unloved sectors that might be able to get off the mat? I mean, we could talk about the healthcare, the biotech, but it seems that with the healthcare bill being voted on and Trump tweeting negative things out, give us some sectors to look forward to in Q2.
I think if you're going to look at some sectors that have been lagging behind as far as market performance is concerned, you got to look at the basic materials. You got to look at the conglomerates. I think, from the conglomerate side, there's still some uncertainty as to the correlation with the Trump administration as far as trade is concerned, as far as tax reform is concerned. So that sector has really been just kind of in this holding pattern, while other sectors have clearly taken off, like the healthcare, like you said, utilities, financials have really benefited from the market activity that's been politically driven over the last 3 months. I think what's going to be interesting to look forward to really quickly in the second quarter is going to be the IPO calendar. Once Snapchat came public a couple of weeks ago, I think that really gave all the other companies that have been waiting to come to market confidence that it's the right time. And they sit back and they look and they say, well, if Snapchat's going public, then I guess it's the right time for us to do it also. So let's get it going. The calendar is going to be really, really robust in April as far as IPOs are concerned. I think we should probably see 15 to 20 IPOs probably in the first 4 to 5 weeks of the second quarter. And that's just an indication of companies feeling that our economy is healthy and then that this is the right time. IPO process, when that occurs, I think it also individual investor side of it, spurs activity, spurs awareness, and once again, spurs this confidence that our markets are healthy, and if these companies are coming public, well, then maybe it is the right time to put our money that's been sitting on the sideline back into this market.
Jonathan, what about the strength of these stocks after the IPO, right? Snap is obviously the big one of the year so far, but we saw recently, specifically in tech, a lot of these IPOs have just been rather weak. So, what do you think about the strength of these stocks that do IPO going forward?
Right. So when some of these companies come public, there is that euphoria of the IPO and the IPO process, and sometimes the pricing does get a little out of hand. The bankers who are running the syndicate will want to be able to get the best price for the company, and conversely get the best price for their clients and whoever's been allocated the syndication. So sometimes we do see a little bit of a displacement in the first few weeks after an IPO as far as an inflation of that stock price. I think for investors who are looking to invest in IPOs, you will get your opportunity, and we've continued to see that. If you're not one of the fortunate few who gets allocated stock on the IPO process and on the syndicate, and you choose not to buy it on that first day or that first opening print, there's other opportunities that will certainly come. I think when you go back, 4 or 5 years ago, everyone felt that they had to buy on that first day if they missed it, and if they missed it, they're never going to have their opportunity again. I think it's quite different now. I think investors have this opportunity and have this this fortunate time that they can buy these IPOs after market, and most likely it's going to be a discount to the opening price when it traded on the first day, and sometimes it might even be a discount to the syndicate price.
Jonathan, so what if one of your clients calls you up and says, I got to own a retail stock, Jonathan. I need retail, some brick and mortar in my portfolio. What words of wisdom do you have for them? Or is there any issue that you would take a look at?
From the brick and mortar side, it continues to be this fine pull between online sales and brick and mortar. And what we continue to see is that consumers are feeling much more comfortable steering and directing their business through online sales. Brick and mortars, there is a need for it, there is a want for it, but clearly, as we're seeing in Sears, and the headlines that have been associated with that company, the pressure within that sector for brick and mortar stores is clear, it's evident, and I think it's going to continue. You look at, you always come back to Amazon and the product that they have and the process in which they distribute products is really exciting, and it's also enticing for investors. And when you're looking at different companies to invest in, I think you have to think about what's working today and what do you think is really going to work in the future. And unfortunately, from a brick and mortar side, it seems like that seems to be moving in the wrong direction. Walk around a mall whenever you have a second, and you'll start to see that there are some stores that used to be there, might not be there. You'll see stores that used to be crowded aren't as crowded, and the REITs, the mall REITs are having a significant problem with brick and mortar and having retail stores survive.
One final sector I have to ask you about, near and dear to our heart here in the Motor City. GM and Ford. I mean, GM is a company that just comes out with earnings beats and guidance and good guidance, increasing dividends, and man, this thing just gets killed. Just give us your take on GM or Ford.
Right. I mean, you look at the activity that we've seen in the stock. If you kind of you go back and see the volatility that we've seen in GM over the last few years, it's the high's been around 40, the low's been around 28, and it kind of bounces around back and forth in between there. That clearly has been a sector since the financial crisis, 2008, 2009, that has had significant pressure on it, and it's taken a lot for it to really gain stability and gain investor confidence. And as we continue to talk about the Trump administration and some of the trade plans that he has in place, I think the automotive sector is clearly going to be within that target, and investors are going to have to wait and see once again what the Trump administration is going to do and how this is all going to play out. And I think there might be some indication from this healthcare reform how the House, how the Republicans, how the Democrats are going to vote, and if there is the ability for President Trump to do what he wanted to do, what he's been talking about throughout his entire campaign.
We've been on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, thanks so much for joining us today. Have a good rest of your day, and good luck.
Have a great weekend, gentlemen. Thank you.
I wanted to bring up Apple for a quick second now, something that came across the Benzinger Pro Wire a few minutes ago. First of all, the Apple Store website is down, and all it says on the site right now is, we've got something special in store for you, and we can't wait for you to see it, starting at 8:01 a.m. Pacific time.
Didn't they do this earlier in the week?
Well, there's a red iPhone that people aren't too thrilled about, but
Red?
yeah, that was from like Monday. Yeah.
Uh-huh.
So they got something new again here? Huh.
I don't know. They can't wait.
So say it again. So
the Apple Store website right now does not say anything except for, we've got something special in store for you, and we can't wait for you to see it, starting at 8:01 a.m. Pacific time.
That would be Pacific time, so 11:01. That's exciting. We've seen this happen before though, where they say we got something exciting for you, and then they do some tweak to the iPhone, and it's like disappointment in the stock gets the beats. So so maybe that's why we're trading up here this morning on Apple, because Apple actually did catch a downgrade from Needham here today. Although the downgrade isn't really a downgrade, because they're going from strong buy to buy, and like you said, they were raising their price targets. So, but often you would see that bring the stock down a little bit here, and the stock is trading higher. So maybe it's just on speculation on what this new product could potentially be.
Check it out, Dennis. They're doing it in all different languages too.
They always do that.
Oh, they always do that?
Yeah.
I guess I don't go to the Apple
No,
store.
I guess
Either way, I think you will move on this. I think that's market moving news. So if you're trading Apple around 11 o'clock, be aware it's probably going to have a little spike up or a little spike down when whatever is released. I mean, if everybody's disappointed, the street's disappointed with what they're releasing. Like I said, if they if they did something like Bob Wire says and just they came out with a blue iPhone, I think they're going to hit the stock. So but maybe they got something cool. So I'll definitely be tuned in to see what happens. But careful if you're trading Apple around 11 because that could be a market-moving event.
I mean, and it could be the red iPhone. It could be that just they're releasing the red iPhone today. I don't know, but the red iPhone story, that news was from
The red iPhone.
The news was from days ago. So I don't know what it could
Got
be.
the red
so we will be watching that.
We have been ignoring Downward Dog here, and
What's he got?
He's got a couple stocks.
What's our yoga trader got for us?
I didn't call him Downward Dog. I called it correct. Hormel.
Isn't he Downward Dog?
Downward Dog.
I thought he was Downward Dog, like the yoga trader. Like, the downward dog position. Isn't that what it is? Downward dog.
Yes.
Well, I've always called you a yoga trader, downward dog. Isn't that what he means?
I think so. But let's get to Hormel Foods here, and he's trying to pick a bottom here. I mean, this is just not a pretty looking chart. The food sector's been under pressure overall as well. So if you're trying to pick a bottom in here, I think you lean on the low of the move at 34.19. Maybe a nice clear break above 35.50. Get this thing on some strength up to the $37 level. Dennis, any thoughts on Hormel Foods?
Just been quiet. I mean, this is a stock that is obviously a lower beta stock. The food stocks do trade, not nearly as volatile as the overall market here. If I'm looking at this, you got up to 35 there yesterday. I can just go take a quick look in the book just to see if there's anything there. Sometimes when you have a high rate on the kisser, you wonder if there's something kicking around. I don't see. The book's pretty empty there, so I'm not seeing really anything jump out. I mean, I see some size up at 35.50, but that's quite a bit higher. But it's just sleepy here, and I would say, this is in range bound until I can get through 34 or even the low, which was 34.19 back on February 23rd, or, that it's actually traded inside. That's interesting because since it had, I believe that was the earnings report on the gap down day, that candle from the first day after, the high on that day was 35.73 and the low was 34.19. And since that day, Joel, we've had like
Look at
15
that.
trading sessions. We've never violated the high or the low.
That is that. So be patient with this one and maybe trade, be ready to trade it either way. As, Tommy Lackey looked both ways on it. Another one from Downward Dog, and you want to see a funky looking chart here. Look at Hain Celestial, Hain. Have you ever seen this? You gap down, long consolidation, gap up, long consolidation, gap down, long consolidation, and boy, look at that.
He gets her
thing.
back and fills the gap.
Yeah, look at that. 38 looks huge. Do we have anything going on in the pre-market to
Zero volume, so there's nothing happening here. This is not traded at all, and the market's wide, so it's telling me there's not really much out there news-wise on this thing. I agree here, Joel. I mean, that's where you gapped up. Obviously, gap traders like to see the gaps filled. To fill the entire gap, you'd have to get up to 38.47. We're talking about the gap down day on February the 13th. So it's filled 90% of that gap, or at least 80% of it. So I don't know, it could fill the rest of it. But again, a lot of overhead supply up there. So if you're jumping in now, I think you might be a little late to the party.
Yeah, 38. Keep an eye on that. Sold off hard off it yesterday. Haven't seen much on Flexion Therapeutics Inc. Big day yesterday. What was the news on it? Takeover news?
FLXN. Spencer, we got to go to you and the trusty Benzinga Pro for the Flexion news, but holy cow, that was an explosion yesterday. Stock from 19 all the way up to $28.20 before settling at 26 and a quarter. FLXN, you got something on that one?
Well, yeah, it was Sanofi's in talks to acquire them, according to a source. Yeah, it's a rumor. It's Sanofi declined to comment. Flexion would not comment, so nothing confirmed. Just M&A chatter.
So chatter will lift stocks there, and we don't know if there's something to that or not. Obviously, I don't like chasing stocks on rumors. I've talked about that before. I like buying them back if they leak back to the area where they came from, over the course of the next week or two. That's when I get interested. But I'm not paying up $6 on something. I mean, it could materialize. It could get taken over at 30, but just your risk return here is a lot different than it was obviously yesterday.
28.
Joel, you on mute?
Why, did you hear Spencer yelling?
Joel, you okay? I know you had a rough night yelling at your TV all night, but holy cow, your voice.
28.20 is your pre-market high. Keep an eye on that for continued follow-through. We backed off $2 since that level.
Couple other ones here. Ace is just saying ViewRay. This is a stock I've never followed. VRAY. Stock was $3 at the beginning of the year. Is now $8.10. So this thing has been on a little monster move there. I don't think this is a huge trader though, but it's been a good run. I mean, 6 to 8, basically 4 green candles in a row here. VRAY moving.
8.25. That's the high from yesterday. Needs some follow through at 8.10. Let's see what's going on in the pre-market trading. Not much. 8.25. Let's go out a little bit farther out. Man, let's go to a monthly here. Is this a new stock? That's an all-time high here. So 8.25 is the only level you have.
It's been moving. Just going back to the upgrades and downgrades because we didn't cover them all. We talked about Under Armour earlier with the upgrade at Jeffries, but you've also got some other major ones here too. Macy's downgraded here at Citi. I feel like this is way late to the party here, but the stock is still looking ugly on the charts there. So I guess Citi says there's still more meat on the bone here. I mean, if you take out the lows, if I was trading this and trying to pick a bottom, and I'm not, because I've been concerned about these retailers for a long time. I know it has a 5.38% dividend, but I'm not even sure how safe that is in a stock like Macy's, and I'm not sure they're going the same way, that they're not going the same way as J.C. Penney or Sears. So that's why I'm hands off on Macy's, because I don't see how it's much different. 27.83 was the low from 2 days ago. That's a level it's got to hold here today, but Citigroup downgrading them.
You can see that double bottom there, 27.83, and I guess the only thing we should just talk about in this stock, you get a buyout rumor, and this thing pops to $34, and you don't get immediately follow through that level or some substantial talks. I mean, this thing just came right back in, gave you another test at 34, and now Macy's, I'm going to have to go to my monthlies here. We are trading.
Awful.
Yeah, boy, I got to go even farther.
How many years do you got to go back to find? We got to go 2012, eh?
Yeah, 2011. 2011,
Wow.
October, you had a 24.38 low, but I mean, obviously we can't go there right away, so there's probably some daily levels. But right now, 27.83 is key. Dr. J wants to know about FedEx, and that got really overdone here on the earnings day and trading up.
It was crazy on the earnings day because it went down on the initial earnings report, Joel, down like 183, and then it bounced all the way up to almost $200. And then, it opened and kind of just traded, not even that wild considering how wild it was the night before. And then yesterday gets murdered. So, and loses 5 points here. So I don't know. I don't see much support really in, the chart there until you get down to that like 184, 185 area. Nothing major.
Yeah, look at that. It's been steady. A step-down seller yesterday. And really on the day of earnings here, let's just take a look. That was not an all-time high, but just shows you when the stock goes down like that and then gets back up to, a lot of times it's like, whew, I saw this thing trade 183. Now I can sell it in the 190s. So that helps out. The psychological that makes the offers come down. I see a low at 88.31. That was back on February 10th.
There's a question on naked shorting here. Tracy C and Ace are talking about it, and Ace has defined it pretty well, so I'll just read what Ace has said. Naked shorting, the illegal practice of short selling shares that have not been affirmatively determined to exist. Ordinarily, traders must borrow stock or determine that it can be borrowed before they sell it short. Yeah, it's basically, shorting stocks without having, the borrow. So, that you don't know if those shares are even out there outstanding. And then Tracy's asking, how, do they get these shares to sell? Well, it all depends on, you're never going to have, naked shorting practices. I don't. But,
Wait, Dennis.
but
Dennis.
Yeah.
You just cut out. Repeat what you just said.
So naked shorting is something that they really cracked down on after the financial crisis in 2010, 2011. And, basically the process for me when, I'm looking out, if I'm borrowing a stock, sometimes stuff is just easy to borrow and you can just short it because your broker has inventory. Sometimes your broker doesn't have inventory and they have to go outside your brokerage to find the shares to short. So you go outside the brokerage and you actually, they will, it's called a locate, and they go and locate the stock. Sometimes your broker will have sometimes a trader will independently have a locate broker as well. So your professional traders can actually go outside the brokerage altogether. They can go to their locate broker and locate the shares, and then they would give a code to their broker saying, I have these shares, I'll take liability for this. Basically, here's, my code where I located these shares, and I'm good to go. So because those traders have done that independently, naked shorting would be basically when the trader is just making a mistake or he's lying, that he didn't really go and find those shares, and then he just flat out sells it. So, that's the issue there is, not having the borrow, like actually not borrowing the shares, because then you can create, existing shares that don't exist even because they need to all be accounted for. So you could have situations where there could be more shares, short than the float is. So, it's basically, it's something that they've cut down on is illegal, but you had practices back, 2005, 2006, where they didn't really crack down on it enough. So you did have traders probably, performing illegal, short sales, even though it was illegal back then as well, because they weren't cracking down on it. It was, maybe, a little more out there. But now, you're doing naked shorting, you can go to jail for that. So, if you're going out there and just lying to your broker and saying you located the shares and you really didn't, that could be jail time. So they're cracking down on a lot. You don't see as much naked shorting anymore.
All right, 9 o'clock now, 9:01 actually. Time to get our last guest of the week. We'll say goodbye to Dennis, and we'll say hello to Kenny Glick. He's the owner and creator of Hit the Bid Radio and HitTheBid.com. So we'll be right back in like 10 seconds with Kenny Glick. All right, welcome back, traders and investors. We're on the line now with Kenny Glick. He's the owner of HitTheBid.com. Kenny, what are you up to today?
I'm shorting stocks, and I'm not wearing any clothes.
So you're naked. So you're naked shorting, is what you're saying. Okay, great.
Like I was saying, that's the best definition of naked shorting I think I've ever heard. The literal definition.
That's right. Is there anybody going to be coming for me this morning? I don't know what's happening.
You might get arrested for that. You actually could get arrested for that one too if you're in public doing that, Kenny. So word of warning, that naked shorting can get you in jail too. You better be, in your confines of your own home when you're doing that one.
Okay, all right.
What's going on, boys?
Not much, Kenny. Tell us about. I want to ask you first off the Snap IPO. I'm sure you've been watching that. What are your thoughts there?
I was making some comparisons actually with my friends and my trader guys that I find it ironic that the top of the market, or when I'm doing quotation fingers right now, the so-called top right now, it's a really nice parallel when Alibaba came out and everybody was all hyped up about Alibaba, and we had a really, we were in that same predicament where everybody was waiting for a sell-off, and lo and behold, the Alibaba, IPO came out, and we had a top. If you take a look, I think it was March 1st, maybe March 1st or March 2nd, the market pretty much stopped on a dime when the Snap IPO came out. I'm not a big fan of Snap. Again, my kids love it. I just got my first, Snapchat. I started doing it with my, my friends and my kids. Yeah, it's fun. I don't know where they're going to make any money.
It's
but,
fun. It's fun.
Yeah, I don't get it. But right now, it's it did the same exact thing that Alibaba did, and some of my best trades of the year so far have come off with a couple of well-timed shorts on the Dow. So it's been a nice couple of weeks so far since this thing came out. going on with you guys?
No, not. I mean, not much. We've been. That's what I've been saying for years now. That's what I've been trying to tell people is that Snapchat's fun. I don't really get how it makes money either, but it's really fun. It's something dumb. It's fun in a dumb way. But that's how I use it anyway. Is sort of for silly stuff. What about UVXY? I mean, every time you're on the show, we have to ask you about UVXY.
Oh my God, hilarious! But it just did the thing that we've always been worried about. 3 up days in a row, and we're finally starting to see some volatility come into the market. But yet, I just want to say hi to everybody out there that trades this UVXY. Just want to make it perfectly clear. This is not a vehicle to hold for more than 3-5 days at most, because we're finally here. Now, the market is quote unquote volatile. We're getting some selling finally. And look where UVXY is, people. Go out there. Look at a chart. Look at a 10-year chart, for God's sakes. You don't want to hold on to this thing. But now that we're finally starting to see it not completely plummet, that's when you could finally dip your toe into it and maybe trade it on the long side and look for some shorts finally. Because, I mean, I love shorting stocks. I know, Dennis, I believe you were a shorter also. We have not had many opportunities to short anything. But finally, we got a little beat down in U.S. Steel. We had some, finally the Dow gave up some points. And if you look, it all starts with the UVXY. For instance, today, right now, we're seeing this thing gap down. So what I do as a trader on a day is if UVXY starts to gain some strength, that gives me added incentive to maybe finally look for some shorts. And generally, it's a great tip-off because if the market is selling off and the UVXY is not going up, you have to actually realize it's probably going to be a short-lived, tiny pullback, and you probably shouldn't hang on to your short. So it's been a great tool. I just want to make it perfectly clear that nobody should own UVXY. And I have this debate every month. I find somebody tells me that they're dollar cost averaging in it. And it's not a vehicle, please, people, to hold on to for more than 3 or 5 days. You're not going to time the next black swan event and make 300% on this thing. So, but it's been a great indicator for me lately to, push some bets that I had on some, diamond short.
Kenny, I go to my mailbox every day and I look for my Hit to Bid T-shirt and also my Dow 24,468 hat. And I'm disappointed. You said you had 1,000 of those things in your garage. When are you going to send me one?
Well, give me your home address, or do I have to send it to your yacht or your mansion, as they say?
Yeah.
I don't know. Just, send me an address, and I will send those shirts. I will send all kinds of presents to you. If you have kids, I did my spring cleaning, so if you need any Barney DVDs or, some, I don't know, some kids' toys, I'll send them along to you with a couple of T-shirts. You got it, man. Let me know how many you need.
All right, I want to talk about another one of your favorite stocks, dry ships. $1.20. What are you doing in dry ships? No. Kenny, what are you doing in dry ships?
We're not even going to talk about dry ships anymore. I want to talk about something that you mentioned. You mentioned VRAY, right?
Correct. Yeah, we were talking about that earlier.
So I want to ask you guys, because I find that stock I just stumbled onto it because I saw, I think it was just maybe an article rolling by. And this is a funny story in a way. Funny to me because it might be one of those things that you had to be there. When I was back in 1998, 99, one of the biggest traders in my firm, his name was Ray. And we also had a bunch of, Hasidic Jews that worked with us also. And one kid had a lisp, and he'd always want to ask Ray some questions about, how he was the greatest trader in the world. But he wouldn't say Ray. He would say Zay. What does the moving average? Zay. So when I saw this symbol was VRAY, and I saw it moving up, I was like, in honor of Samuel, I'm buying this stock. And next thing you know, I'm up like 10% on it, 15%. So what do? They have an MRI that you can look into your soul. What's the story here with Zay? Tell me about it, because I own the stock now. And again, I only buy on technicals, and I saw it was breaking 750 with a $8 all-time high, and I'm in. So I'm curious. What do? It's like an MRI company?
Yeah.
What's happening here?
Yeah, no, they make MRI machines and radiation machines.
It's something new and exciting. They've improved the MRI, I guess.
Maybe more people are getting MRIs. I don't know.
Oh, well, thanks for that. Thanks for that in-depth analysis. But yeah, I mean, I like the stock. I like the chart, and I like a lot of these little guys lately. Anything with the word therapeutics or oncology or biosciences have been breaking out. And generally, I like these stocks when they break 5. They generally rip to 750, and if they break 750, quite often they go to 10. I'm sitting in this IMMU, which is just, powering its way up from like $3. And, normally, again, going back to shorting, when I see a stock that's gone from 2 to 7 or 8, normally I'm thinking, all right, let's hammer this thing right back down to $5 or, back down to 2. But it seems like we've changed the game a little bit. A lot of these are hanging above, $5, and they're building a base, and then they're gravitating towards 7. They're actually starting to build bases. So there is some support under these. Not that I know too much about what these companies do, but a lot of these little biotechs, man, they are just unbelievable movers lately. And you just got to be careful with the float. And you was talking about the naked short selling, but right now, I was looking at a couple of stuff that you mentioned, but I like this. I like this Ray, as we've been calling it. But
Kenny,
why do you keep mentioning dry ships to me?
I don't know, because we were cracking up. I think the last time you were on, we were just cracking up about it. That's, I think, when it had the run to 100 or whatever. And we just were talking, it's going to go back down to $1, and that's due for another reverse split. Was there a healthcare stock or that you were looking at? I maybe had a simple C in it. It'd been kind of beaten up. Yeah. What one is that?
That would be CYH. We did really well, and I was just having a discussion with somebody about because I use a buddy of mine. I guess I'll drop his name, Zach Hurwitz. He about 4 or 5 years ago, he was in one of my chat rooms, and smart kid, awesome kid, told me that my chart analysis with my high-low candlestick pattern that I use, something I've been using my whole life. He started to tell me that if I would just let VWAP do the work for me, it was actually plotting the same high, resistance and support that I was doing on my own. So I started using VWAP, and then he gave me something called the multi-day VWAP. Basically, you could use any time frame you want, and it would give you the VWAP, 2 months, 6 months, 2 years, 3 years. And I just started plotting it along. And the CYH was coming out of which, some people would say, why would I be looking at a 2-year VWAP or a 3-year VWAP? And, again, a lot of you guys can't follow along because it's more of like a proprietary little code that he gave me. But this stock broke out of a 1-year VWAP and screamed right to a 2-year VWAP. And if you can believe it, the 2-year VWAP was around 975.
Wow.
So that's where we sold it. And, it was a really nice move. We held it from about 550 and we sold it 975. And we're just waiting to see. I think it's going to come down to whether this healthcare, passes or not, whether this thing breaks out again. This is more of a, I believe, like a chain of hospitals and that type of thing. They had some, accounting problems, but, all bull markets forgive accounting problems over time. So that's the thing. If this market starts to go down, all the Ponzi schemes will be revealed, and all the, a lot of these companies will get their comeuppance. But for now, this market is just, hanging in there, and until UVXY really starts exploding, I'm going to stay, and I'm going to stay my bullish self.
All right, Kenny Glick. Not only is he a very funny person, a great trader, but he can really cut the rug on the dance floor as we joined.
Oh, yeah.
At the Traders Expo, Kenny. We had a great time. Spencer, we're going to let you go, Kenny. Spencer, you want to wrap up the show?
Sure, thanks a lot for hopping on. Thanks a lot for hopping on, Kenny, and we'll talk to you again soon.
Yo, always a pleasure to come on with you guys. Thanks for having me on.
Oh, I just cut Kenny off by mistake. Sorry about that, Kenny. That's our show for the week, the day and the week. Hope you enjoyed it. Hope you got some value out of hearing Kenny, Jonathan, and Scott on today. Hope you enjoyed all our guests this week, and Hope you all have a good rest of your day and a good weekend. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Next week, who do we got on the docket, Joel? We got a pretty good slate of guests. We have, Bob Wire will be on the show one day next week. We're going to have Warren Lorenz from Tech Meets Trader, Tim Melvin, Mark Chaikin, potentially JC Perret. So we got some good guests for you on the docket there. Have a good rest of your day and a good weekend and good luck out there, everyone. And we'll be back with you folks on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.